Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, the market started off down today on news of a Goldman Sachs downgrade, a key downgrade, and the S&P was down as much as 8%. Now, this is coming after an entire week and a half of very positive news, very swift upside move for the S&P 500, and a very quick downside move for the VIX. We've come from 29, we touched below 23, and we're hovering right above 23 today as the market has rallied back to unchanged, and we're seeing a relatively quiet day after a shakier open. There were a few trades in the morning, and you could see a little bit of fear step in. The October 27.5 calls got a lot of trading in the morning, trading 30 cents, then 35 cents, with buyers both times. Now, yesterday, there were customers looking to sell those for a quarter, but with the little pop out of the VIX, those were trading up to 35. Now, the most action we've had is an extreme October upside strikes. Now, this is the same theme we've been seeing for a while. We've had one customer extremely interested in crash protection. It's a type of covering that won't pay off if the VIX moves 50% or 30%, a moderate up move, but if it goes back to where it was last fall in the 60-80 range. So today, what they've been doing is selling the October 32.5 call to buy the 37.5 and the 40 call. They did that 10,000 times. They traded first 2 cents. Traded first 3 cents, then 2 cents. The crowd was paying to buy that October 32.5 call. Now, for the crowd, it makes sense because they don't really have any upside risk on this thing until after 45. So everywhere between 32.5 and 45, they stand to make money, and they view that as the more likely scenario. For the customer, it makes sense because they're really worried above 45. They're really worried crash level, and this is a way for them to collect 2 cents, 3 cents, give up some midterm risk, and get that extreme upside risk. And this is most of the covering that we've been seeing during the October cycle is Christmas trees like this, selling one strike to buy two, trading for very close to even money. Now, that doesn't really bid up October volatility in the VIX. It has really not a lot of effect on the 27.5s or the 30s because nobody is outlaying capital to buy these. Nobody is pumping up volatility. Rather, they're simply trading one risk for another risk. So that's what we've had going here. We've had 30,000 trade on that strike. They're also quoting a great number of these, always selling one closest to at the money, buying two, looking to trade medium risk for the risk of a crash. This is Jamie Tyrrell with Group 1 Option Monster.